Hello and welcome to Friends That Invest. Today we are joined by Jaclyn Johnson, a serial entrepreneur, mentor, and investor. She's made a real difference with real impact for underrepresented founders. She is the founder of the largest media and events company, Create and Cultivate, for ambitious women who want to connect, learn, and grow. That's not enough. Jaclyn is also the CEO and co-founder of Cherub, a platform that connects entrepreneurs and angel investors based on mutual interest. And somehow she has also found time to own Receipts VC, an umbrella for her venture investments, including a 20-plus portfolio of companies ranging from beauty to tech. Jaclyn, thank you so much for joining us today. I don't know how you have the time to even be on this podcast, but it means a lot. And we're so excited to, I don't want to say pick your brain, but kind of pick your brain on angel investing.
I love it. I'm so excited. I've been such a fan for a long time. So excited we get to do this.
Firstly, I want to go all the way back to your childhood. Let's start from young Jaclyn. Growing up, what was your money story like? Like, did you have parents that were really good with money, or were they really frugal? And how did that impact you growing up?
Yeah. So I grew up with my parents basically being business partners as well as mom and dad. They had a company that they were co-owners of. So work was really something that I just grew up around all the time, and money for that matter. Like, they were working when we were home at the dinner table or when we were at their office after school. So I was just kind of surrounded by their business. Like, for me, it wasn't like my parents went off to some office that I had no idea what they did. It's like I was very much ingrained in their business as a young child. And I think their work ethic was something that like really rubbed off on me. Like, I remember them really working on my sister and I to know the value of a dollar early on. And so for me personally, I was always really excited about work. I got my first job when I was 13. I was actually working at Banana Republic, was like my first job. And then I was so excited about it. I ended up getting 2 jobs in high school, and I worked at a gym, and I loved saving up money and being able to get things. And like, it just always for me was something that felt super exciting. My mom is the financial side of the business, and she really instilled in my sister and I this idea of savings and really being able to, be precious about money in a lot of ways. Like, they were definitely conservative. Like, I joke, I came from like an anti-mini fridge family. Like, if we went to a hotel and you even looked at a bottle of water in the mini fridge, it was like, don't touch anything. Like, we might get charged. It was like, do not spend. It was a very conservative approach to money. And my mom was really bullish about getting us, great credit early on. She got us credit cards when we were like 14 and would like buy gas once a month and pay it off and like make sure that we were building up like to be protected and kind of set up in the future.
Where did your mum get that like financial education from? Because that's really rare to hear, like in our generation, that someone's mother was the one that was like credit score, learn to save, figure it out.
I think it was 2 things. One is that she was on her own from a very young age. So she really was on her own from like 16, 17 years old, living in New York City, moving, getting a job, setting herself up financially. So she really had a lot of like crash course early financial independence. And 2 was that she got divorced really young as well. So she was married really young and then divorced really young. And I think for her, like, she really instilled in my sister and us this idea of being able to be financially independent so you can always walk away from a tough situation, whether that be a marriage or a job or whatever, something that's like, not making you happy. And so I think from her, it was like really her life experience in those early days that set her up to be more financially independent than I think most women were at that time.
Did you feel the difference like growing up? Was it New York that you grew up in?
I grew up in Florida, actually. But yeah, I think like, so I had an interesting upbringing in the sense that my parents worked hard to send my sister and I to a good private school in Florida. And that private school was interesting because we were really on the lower to middle class scale in terms of everyone else at that school. So majority of the students in that, kind of school were in the 1%, right? These are like Palm Beach kids, Ferraris in the parking lot type deal. And my sister and I were definitely not that. So I think I had this interesting education where I understood and saw my parents working really, really hard for the things that we had growing up, and understood work ethic and owning your business and being a small business and being scrappy with your budgets while also getting an insight and window into the 1% and how they live and work and what their parents did and how they approached money. And so I had this kind of interesting window into both worlds at a very young age.
What was like an interesting takeaway that you had? I mean, what a cool, but also like quite confronting way to grow up. Like imagine being 16 and being like, we don't have a Ferrari to drive to school in. Like, are we outsiders?
No, totally. It was very, very interesting. I think like what one is like, I saw what money could get you. And I think I was able to build a little bit of aspiration for like wanting those things in the future. Obviously not at that time, but I also understood like the hard work it took to get there. So I think it was interesting because like, I remember specifically like my boyfriend in high school's family would like fly private. Like when I would go on family vacations with them and like just things like that like weren't even on a radar of like what my family would ever do or be interested in. But at the same time, I understood like that to get to that point, like I was really interested in like, what did their parents do? How did they get here? Like, and so I think like my parents like didn't go to college. They worked really hard for what they had and were able to give us a really, really, really good life. But I was able to see how that manifested across different ways people lived. And so I think the insight for me was what's available and like kind of like almost like an expander in a way of like, oh, what's possible in life by getting access to these rooms and understanding sort of the dynamics. And also on the flip side, seeing the hard work that goes into just the everyday.
What did their parents do? I'm just thinking, what did your childhood like boyfriend's parents do to have a plane?
A real estate developer. So early, like one of the largest real estate developers in Florida. And obviously at the time, this is now like, 30 years ago or something, but West Palm Beach, like where I grew up, like was the fastest growing city in America for a long time. And so they were really behind all of the developments that were going in there.
Oh, wow. Okay. Real estate.
Yeah.
It's really interesting because it sounds like, for a lot of people, I've heard the story time and time again where someone gets to be close enough to like close proximity to wealth. And it kind of, like you said, it makes you realize, oh, there is way more than I could have ever believed. Because if you don't see it, and, back in our day, we didn't have Instagram at a young age to be like, what's possible? But it's so amazing that it motivated you as opposed to overwhelmed you and made you want to, just.
Yeah. Well, and I would say another expander for me was my aunt. So my aunt Debbie is like one of the top real estate agents in Boston. And so it was interesting because growing up, my sister and I would go up to Boston, stay with her for the summer and basically be her little assistant at all of her real estate things, like write down. And we would drive around in her like white Porsche. And I remember like taking all the notes, but I also got exposure to like new places. And so she really was the one that was like, you should go look at going to college out of state. I think it would have been really easy for me to go the path of like going to a state school in Florida, like getting a full ride because I did well in high school and like really just staying the course. I feel like that's like what feels like a very normal path for people. Whereas like a lot of the people in my high school were like going to Ivy Leagues and all those things like these, like, and it was interesting for me because like my aunt gave me a window into like, hey, you should also be looking at these things. And given that my parents like didn't go to college, it was a whole new experience for my sister and I. So that really was what motivated me to like eventually leave Florida and like go to an out of state school. And I ended up going to NYU, but like end up getting into like moving to a city and having new experiences and like pushing myself in those ways. Otherwise, I don't think I would have ever done it.
It sounds like you had a lot of strong female role models. And was this your mum's sister, this aunt?
It was my dad's sister, actually.
Dad's sister. Oh my God, perfect. You've got role models on both sides. So I just want to sort of start to fast forward. So you went to NYU. What did you end up studying?
So I was a journalism major. I was journalism public policy. I really wanted, and again, this is a long time ago, but I really wanted to be a journalist for digital media. So this was like when Gawker and some of these sites were just starting to come out. So I thought I would be more on the editorial side of magazine production.
And then you went from there, you then started Create and Cultivate. I'm kind of fast forwarding a little bit. And then you got into angel investing. Like, what did that journey look like? Did you have women in your life that were angel investing? Or were you like, this is what I've seen, like my Palm Beach friends and family from school do. This is the way to wealth. Like, where did that journey from, being a journalist student at NYU to being an angel investor? How did that happen?
I mean, 1,000 things in between, but I would say no, angel investing was definitely something that I was the first in my family and friend group to really do. I think like what was interesting is like, so I had been building Create and Cultivate and my other company for a while at that point. And basically what I started to have was unprecedented access to female founders at the earliest stages of building their businesses. And venture was foreign to me at that time. I think like this is 2011, 2012. And like those conversations, one, women were rarely having them. Women were rarely getting investment, but especially angel investors did not look like me. They were not like in the same financial position as me. It was just like not an opportunity that you got often. And really my first toe that I dipped into angel investing was through Jen Rubio, who is most well known as the founder of Away Luggage. But previous to that was like in different roles at different companies like Warby Parker, All Saints, etc. And we had been friends since those days, kind of working together, collaborating on things. And so when she wanted to start her own company, it wasn't even that she came to me to angel invest. She just had told me, hey, we're raising a friends and family round where people can invest in the company early. That's what we're in town for. They were in Los Angeles, her and her co-founder. And for whatever reason, I just said, well, I'd be interested in angel investing, even though I genuinely had no clue what that meant.
I have a lot of questions. Firstly, that's amazing. It's very scary being the first in your friends and family to do something. How, like when you said you would do it, like how did you decide how much money you would give? How did it all work? And I guess what I really want like our listeners at home to get comfortable with is the idea that an angel investor is not like an identity of someone that, wears a suit and works in a big high rise. Like it is people that even if they've had, some success or a lot of success, for a lot of them, it's not a handbook that they've been given. You like kind of figure it out on the go by the sounds of it.
Totally. And so for me, my question was, I was like, well, how much are you looking for? And they were like, it's a $10,000 minimum. And so for me at the time, I think the way I thought about it was a few things. So at the time I had not even Create and Cultivate was barely a business, but I had my agency business. So my agency business was like a multi-million-dollar business. And basically though, my whole life was like expensed on that business at that point because I was running it. I had clients, I had this. So like, I wasn't on paper making a lot of money personally, but like the business was doing extremely well. And I was reinvesting and hiring and doing all these different things. And so I decided, I was like, I'll write a $10,000 check through my LLC, essentially, that like I run all my other businesses through. So at that point, I had my blogger income. So I was making money as a blogger. And then I also had my agency income. And so the way I treated my blogger income was really as like fun money. And like, this wasn't like a ton of money. I would maybe make like $20,000 a year off of that, like brand deals or whatever at that point. I mean, this was like early days of blogging. And I basically was like, I'm just going to take this brand deal I did and I'm going to put it towards this investment. And the reason I invested was like a few different things. One was I really believed in Jen and Steph and like their vision and the way that they were sort of thinking about building this business, I thought was really unique. Two was like they had the track record of like being at Warby Parker. They understood supply chain, all these different things. And that also the Warby Parker founder was investing. And so I was like, wow, that's like a huge signal that this is like something that's really cool. And three was like, I wanted to be in with this group of women that were building these cool companies for Create and Cultivate, like on a biz dev side. So obviously getting women to speak and saying you're investing in companies gets you in the door and builds social capital as well as financial capital. So the way I viewed it was $10,000 that hopefully would make me money. And if not, was a good investment in the relationship I was building.
That is really interesting. I find that even in my own journey of like when I made my first angel check, it was also a friends and family round. It was also $10,000. And I think, again, there's this huge misconception. It's hard when you're like so deep into it, but there's this huge misconception like, oh, to start angel investing, like, do I need to go to conferences? Do I need to be in boardrooms? Do I need to be personally invited? And it's almost kind of anticlimactic how I don't want to say simple and boring, but it's quite like, it's a friend. It's someone you know. You've been introduced. They go, hey, we're raising. You give them the money. It kind of then leads me on to, how do you look at deals? You've kind of touched on a few examples, like, what is their track record? Who are the founders? What are they building? It seems it's very founder focused as opposed to the idea focused. But what are sort of the main things you look at for a deal that makes you go, that sparks my interest? And on the flip side, what do you look at that goes, that's probably not a good angel investment in general?
Yeah. So for me, it's very founder specific. Having been a founder that's exited companies and built companies, like, it really is so much about the founder's resilience, relentlessness, like ability to get shit done, connections, unfair advantages. Like, those are really like the bulk of what I look for. The second is like the idea and concept. Is it something, if it's a product, do I like the product? Like, do I think it's disruptive enough to get people on board? Are the margins really good on this business? Like, is the business model healthy? And usually when you're looking at direct to consumer, it's like very easy to be like, okay, what are the margins? What are the potential buyers? Like, all those things. Like, what is the potential outcome here? And three is like, can I be helpful? Like, do I provide some sort of unfair advantage to this business to be someone that they should be really, that would be beneficial on the cap table as well. I also think it does matter who else is in on the deals, like who else is writing checks. Like, I do kind of signal that. I often co-invest alongside other people that I trust. But yeah, I would say those are like the three things I really look for. Things that don't make a good angel investment for me is like, if the founder is not someone that I think is like going to take it all the way, if they don't have clear conviction on the path to exit, even in the earliest stages. And three, if like, I just genuinely don't think the product is that outstanding or exciting.
So it seems like out of most of those things, it is very like founder centric. And when founders, especially like female founders, begin their journey of trying to raise capital, do you think there is a level of, especially like at the beginning of the journey, do you think there's a level of them focusing too much on the product side instead of sharing their journey and their experience and who they are?
I think it depends. Like, I think most of the people that have pitched me that are women, it's definitely their story and their expertise. But I will say, if they don't have a lot of that, 'cause some of these founders are very young, they're new, they're starting out, they really lean into like the product and why they have the unfair advantage to do this so young, because they know something, they have unfair distribution on social media, like something like that, which will again be the tipping point.
And what's been some of the examples of companies that you've like invested in that you've been really excited about, just to give people an idea of like, what is a kind of company that I could invest in? Your portfolio, you said it was more like all the way from tech to makeup. So what are some examples?
Yeah. So some of my like more like recent investments, one is actually in stealth, but it's going to be coming out of stealth soon, but it's called UPOP. And it's an AI powered tool that's replacing the LinkedIn bio for creators. So the reason I invested in this one was a few different things. One, AI. I wanted to add more AI into my portfolio in general. Two is like the founder is someone that I've grown really close with. We've, been in touch. I'm also an advisor to the company and how we kind of want to build it and like, support on that end as well. And it was really early in on the deal. So I was very excited about that. She also had a VC that was leading the round too. So again, just like more signal that this is a good investment. The other ones I've invested in are more of like the fun household names that everyone knows and loves. So like Lip Tinted, Crown Affair, Ceremonia, Chill House, Messy, which is Ali Webb's new hair care brand. And really these ones were all about the founders. Like these are personal friends of mine. The products are amazing. I understand what they're building. I've known them for a long time and was able to get in very early to these companies, which again makes it more exciting and more enticing. I've also done some tech investments. So I'm an investor in Intro, which is the app where essentially you can connect with different mentors in different areas. So like I'm on Intro. There's also interior designers, celebrities, fashion, all sorts of things, investors. You can basically pick their brain for like 15, 30 minutes. I invested in that one mostly after using the product and being on the platform because I just fell in love with it. I thought it was such a great great product. And then I've done a bunch of like SPV smaller investments. So 2,500 to 5K, where it's really just like supporting the business and the founder and obviously lending my name where helpful. Bloomy is a good example of that. That was an SPV that ran on Cherub, and it is a female sexual wellness brand. Incredible founder, but was like excited to support in like a smaller way.
I feel like a lot of the misconceptions and the fears that women have when it comes to angel investing is like, where on earth do I find these? Like something that kind of got my interest was you said you got in quite early to a lot of deals. And for someone listening at home, when it comes to venture investing or angel investing, the earlier you get, the bigger piece of the pie you get. And then over time, maybe you get in and the valuation of the company is $1 million, and so having 1% of $1 million pie is pretty good. But when the company's worth 10 million, 20 million, 30 million, 100 million, your $10,000 doesn't go as far. And so the returns are lower. How did you get into these companies so early on?
So it was really just like ideation stage. So again, I was friends with them before they started the company. So it's really just like also putting yourself out there. So people being like, I think I'm going to start this company. And me being like, well, and like this happened exactly with Diana Cohen from Crown Affair. She was at Away Luggage at the time. And she was like, I think I'll eventually start my own thing. I was like, well, when you do, let me know. I'd love to angel invest. And like, that's exactly what happened. So I think that's definitely part of it. Obviously, Ali Webb, good friend of mine for a long time, Soul Drive. I was like, I think I'm going to start my next thing. Of course, I'm going to support and like be a friend in that way. But this is the problem I've heard over and over again. It's actually interesting. 97% of accredited angel investors don't invest. And our bet was that that's not because they don't want to. It's because they just don't have access to the private markets or deal flow that people who live in Silicon Valley do, that people who went to Wharton do, that people who are in the everyday of these startups do. But it doesn't mean they don't want to write checks. And we use that stat to really catapult the launch of Cherub by creating a platform that is consumer friendly from the design perspective. It looks and feels like a Squarespace, something they're used to seeing. It gamifies the experiences and creates it from a personalized perspective. So if you want to invest specifically in CPG or AI or women owned or whatever, we feed you the best deals that meet that criteria and give you a fit score of if this is a good company that fits your thesis. And then you can just engage with the founder. You can look at their data room. You can get all the information. You can get an intro, do a Zoom call, do a deal. And really what was exciting about that was when we launched it, over $8 million was deployed to these different companies in 6 months. But what was more interesting was that 40% of that $8 million were first-time accredited angels writing checks, meaning we're getting angels off the sidelines and into the angel investing sphere, which was really exciting for us.
I don't know if this is going to make me sound like a huge nerd, but that gave me goosebumps.
Oh, I love that.
Because if you think about it, what you've done is you've put $8 million from the hands of women that want to invest, more importantly, into the hands of women that are building companies. And when like only 2% of like VC funding goes to female founders, the biggest hurdle that we hear from founders time and time again is like, I'm not getting into the rooms. And when I'm getting into the rooms, they just don't get my idea. It's like the typical, Sarah Blakely trying to explain why Spanx is important. And people go, and just like these male investors going, like shapewear? I don't like, why would this be a big business? And, fast forward, $1 billion company. The most interesting part of all of this is that you kind of align it with people's thesis. For people that haven't really heard that term before, what is an angel investing thesis, and how do you kind of build yours?
Yeah. So I think it's really important to think about your angel investments as your own little mini fund, even if you're just doing $10,000 a year in angel investments. But what are you investing in? What are the categories you're passionate about? So that could be healthcare, CPG, beauty, AI, tech, whatever. So this is a personal decision that you're like, this is the category I want to invest in. The second thing of that is like, what is the stage I want to invest in? Do I want to invest super early, or do I want to invest later stage, which is obviously going to be a little bit more of a safer bet? For me personally, I tend to invest sub a $20 million valuation. Anything above $20 million, I know I'm not going to get the return I want. So I really try to be in that sweet spot between 5 and 20 million, usually from that perspective. What's your check size? Like, what do you want to be writing in terms of your checks? 5, 10, 15, 50, whatever. building out that side of it. And then what are the things that are non-negotiable for you? Is it that they have a product in market? Is it that they're, revenue positive? Is it that they are helping society in some way? There's future of work is a thesis. There's so many different angles that you can have. Like there are funds that just invest in items for parenting, that just invest in alternative milks. Like there's literally just like any thesis you want, but building that will help you make better decisions as an angel investor as you're growing your portfolio.
When it comes to the angel investors, like what is the typical profile of like an angel investor that uses Cherub? Like, is she like a, 45-year-old woman that is in corporate or in business? And what are the sort of average sizes that these women are investing?
Yeah. So Cherub is for everyone. It's not just for women, even though there are a lot of women on the platform. I would say it's really a mix. One thing that I love seeing is that there's a lot of founder investors. So these are also people who are also raising money for their company, also investing in other companies and like creating that really fun ecosystem. I mean, Ali Web's a good example. Ali Web invested in Cherub. I invested in Messi. This is like how that ecosystem kind of works to support one another. They are a mix of corporate women, women in real estate, women who have, gotten generational wealth trickle down. It really runs the gamut. Startup lawyers, like you name it. But there is no right or wrong to like who is an angel investor. And I think like, again, it's like my co-founder is like a perfect example of this. Like I consider myself a well-known angel investor, a pretty prolific angel investor. And so I get a ton of deal flow. I, angel invest quite often. My co-founder was an exited founder. She had gone through an IPO with a company that she was part of very early, had a great windfall, super strategic on the product and engineering side, and was like, I get nothing. And then was able to get on the platform. Now she's 10 investments in. And she's really, really like been able to figure out her thesis, what makes her valuable to a company, and also deploy capital. So I think it's like getting out of your head of like, what does an angel investor need to look like? And really thinking about how do I diversify and use this new category as a way to build financial and social capital.
And what are the biggest mistakes that you see like angel investors make besides the first one of like not thinking that they're, the right profile or the right person to be one?
I think the biggest mistake I would say early on in angel investing is over indexing too much into one investment. So I think people oftentimes think they have to invest like $50,000 to $100,000. What I would say to start is I would start with SPVs, and I would start in that category specifically because you're going to get really low minimums, $2,500, $1,000, something like that, and start building up your muscle of like diligencing things, understanding things, taking calls with founders, just building that up over time. Then I would move into direct investments, and then I would increase your investments. Because I think what kind of happens is people get excited. They write a $50,000 check or even a $20,000 check. That company fails, and then they're like, I'm never doing it again. And it's like really like it's a slow burn. Like you need to build up to those types of investments before you just jump in and think it's going to be like the one. It's like dating.
Yeah, it is exactly like dating. You don't just choose the first guy you go on a date with and go like, this is it. This is life. Because they seem great, because if they let you down, then you're like, I'm never going to do this again.
Exactly.
You need to go on a few different dates, figure it out.
Definitely.
I was doing like an angel investing workshop for accredited investors, and this woman, she was in her 70s. She put her hand up. She was like, I angel invested a lot of money into this one company and I still haven't seen a return. And that was really hard to hear, but it was also because, like you said, it's kind of almost natural. You think, well, if I'm going to do this, let me just go all in with this one thing that I'm very convinced about. But I love the advice. Don't put all your eggs in one basket. Date around a little bit.
Agreed.
So the sort of final question I wanted to ask to wrap this up, because this has been so helpful, and you've given so much great advice so freely. Like this is such a valuable episode. If someone is listening and they are stuck and they are like, Jaclyn, just do not know where to get these deals, and I am so overwhelmed. Like, what is the best place that they can reach out to find you or to work with you or to figure out what's next?
Yeah. So one of the things I'm super excited about is that we just launched something called Private Rooms on Cherub. And really, this was born out of this idea of, obviously, Cherub is a great place to start. It's free for accredited angel investors. Join, you can match, get your feet wet, start seeing what you enjoy. But also, if you're someone who's like, I don't have time to like go through all these different deals, I'm not sure what I like, but I want to find someone who's credible, that I like understand their thesis and what they're going after and get their deal flow. So that's how Private Rooms was created. So I have a private room for Receipts, my investment vehicle, and you can join as an accredited investor and get access to deals that I'm super excited about. I'm launching with 3 different deals right now. One is Benny, which is an energy drink that's powered by yerba mate. So better for you energy. They're doing extremely well. They're doing $1 million in revenue in just 2 years. They're in every single target. The founders are awesome, super young, super scrappy, doing an amazing job. The second one is the Carry.co, which is essentially a weighted vest for women that are 30 plus. So strength training is having a massive boom, especially because of GLP-1s. And they're building a strength and longevity business for women that are 30 plus. And as a 41-year-old woman, I am deep in the strength training game. So I'm super bullish on what they're building. And I love the weighted vest. I feel like it's something that has historically been for men. And like they've designed something really, really beautiful for women. And then the last one is called I Love Monday. And so think of this as Rent the Runway for rare designer archival vintage. They're crushing it. They have 25,000 active users on the platform. They're doing 7 figures in revenue year 1. Very, very cool business. And they're amazing founder team. So those are just like a few examples. So I give my POV on why I think they're interesting. Obviously, you can access all the decks and all the diligence and do that yourself, but they're all SPVs. So these are 5K minimums. So great companies to get in on with like a lower investment point.
That is so, so cool. I'm a big fan of good branding and I love the brand name. I love the private room. It's almost like saying, hey, look, for so long, people have like done these deals. As if someone's listening, you can probably figure out like a theme. Like a lot of these deals happen by being in proximity to someone or like working your way up to knowing someone. And it's less about the average person, you know, getting an email and being like, hey, we're opening this up to everyone. So the idea that these private rooms are now like physical spaces and they're opened up and that you can actually, you know, be the hardworking lawyer that doesn't have time to go to all these events and network and post on LinkedIn. You can just go straight to the private room. Like that's incredible. You're building such a cool product.
We're really trying to build for the future of fundraising. We are very bullish that the angel investing market's about to break wide open. So the Invest Act and the Angel Act, which are in the House right now in the US, basically, and they look like they're going to pass. If they pass, essentially what that means is the accreditation kind of goes away. So essentially, you just have to, if you understand startups, like if you work in startups, understand startups, and you can take a quick test, you can invest in startups. So basically right now, the accreditation is like a financial limit. So you have to have like $1 million, like liquid, $350K a year. That basically goes away if you can engage with this new kind of like test that they're putting out. That cracks it wide open. Beyond that, we're about to have the largest wealth transfer in history, from boomers to millennials who love alts, love investing in the private markets. And the majority of that generational wealth is going to women, which is exciting. And so women historically love to invest in other women. So we're ready. Like I think the angel investing markets are about to break wide open, especially as VC moves further and further away from early stage.
I completely agree. And that's why we have been doing so much angel investing content and like building out our angel investing workshops and like having more people listen to these kind of episodes because I think it's about 8 to 10% of our audience are accredited female investors.
Yay.
And they just are like, oh, I didn't realize I was even accredited. I didn't realize that it was, you know, a certain salary or like a certain net worth. I am eligible, but I have no idea what to do next. It's very exciting. And I cannot wait for a world where like more women go, hey, I actually understand this idea. I need weight training. I'm going to wear a vest. Imagine trying to explain that to a man that's like, he's going to be like grannies with weight training. Like, what is that about? And it's not going to work.
I know it's very frustrating, believe me. But yeah, I would love, obviously, anyone who's interested, I can send you a link to join the private room and apply. it'll be really fun. And there should be a Friends That Invest private room.
I completely agree. We're going to get onto that after this episode. Thank you so much. It has been so lovely to have you on the podcast. Like I said, you have given so much free information. It's been so valuable. And hopefully a lot of women listening are either going to go, okay, it's not that scary. I can get started. Or now I have a target to work towards. And when I get to that stage, this is exactly how I'm going to start angel investing. So thank you so much again.
Thanks for having me.